equity and the beauty of the network is it gets exponentially harder to acquire Bitcoin over time. And that's what makes the network secure and stable. And that's a good thing for all of us.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. Michael Saylor opens up on his ties with the White House and doubles down on Bitcoin maximalism. We'll explore power, politics, and why he's all in on BTC. Let's find out more.
Bitcoin has matured over 4 years, and that's a good thing. We used to have, extremely highly levered, poorly capitalized companies driving the market, like the offshore exchange, like FTX and Three Arrows and Terra Luna and the like. And the market has matured such that now you have large pools of more permanent capital, like BlackRock's capital, IBIT, or Fidelity, or Wall Street. And that will create less volatility, lower drawdowns, but it will drive the price up. And on the other hand, it's kind of like saying, your family came to Manhattan in 1700 and you bought up a bunch of land, and then you went back to Europe and you told everybody that Manhattan's going to be the greatest seaport in North America. And here we are in 1800, Michael, and your family owns like 47 blocks of Manhattan, but the prices of Manhattan real estate have gone up by a factor of 20. Isn't it getting it harder for you to do business in Manhattan? And the answer is, well, the price is going up, but there's a lot of other people that are in Manhattan that do things that we can't do. And I'd much rather have other businesses and other pools of capital. Like on the day that Apple and Microsoft and Google enter the Bitcoin ecosystem, the price will go up, but the risk will go down. And one of the interesting things about volatility is, like, if you look at the risk in the space, if you have something which is 10x over collateralized by Bitcoin and the volatility is 60, well, there's a risk. And one way to drive down the risk is to increase the collateral, but the other way to drive down the risk is decrease the volatility. So it turns out you're better off being like 3 times over collateralized with an asset with a 30 vol than 10 times over collateralized with an asset that's a 70 vol. And so I think that's what's happening now. The industry is growing up. It's becoming more secure. It will be accepted by banks. It will. I'll leave it at this thought, which is, when your bank tells you they'll buy Bitcoin for you and they'll make it really easy, and you can do it on the phone, it'll cost you $1 million Bitcoin. And when your bank calls you on the phone and says, you really ought to buy Bitcoin, it's a digital monetary alternative, and when they recommend it, it'll cost you $10 million of Bitcoin. And right now, no bank's going to recommend it, and they're not going to help you buy it, and you're going to have to jump through hoops, and you're going to feel really nervous about it, but you'll get to buy it around 100,000 or a little bit less than 100,000 of Bitcoin. And I think they're all three the same risk-reward proposition, and I bought it at 10,000. I'm buying it in billions of dollars of quantity at 100,000. I'll be buying it at 1 million. I'll be buying it at 10 million. And if you're back here interviewing me when it's 10 million a coin, and you're going to say, Michael, it all worked out, but Bitcoin's 1,000 times more expensive, and don't you feel bad that you convinced all these people to buy Bitcoin at 10 million a coin? I'm going to say, well, Bonnie, the entire ecosystem is much less risky now, and it's still the best investment option. I think it's still better than buying the S&P index. It's still better than buying a warehouse in Siberia. I'm going to keep buying it. It's just like buying Manhattan real estate in the year 2025 when your family started buying Manhattan real estate in the year 1700.
Michael Saylor is back in the spotlight, and this time, he's cheering for the newly appointed SEC chairman, Paul Atkins. In a video clip shared on social media, Saylor highlighted Atkins being sworn in at the White House, with Treasury Secretary Scott Bessent officiating. What really caught Saylor's attention was Atkins' promise to build a clear, rational framework for digital assets, something Saylor believes is a huge win for Bitcoin. Saylor didn't stop at praise. Just days before the announcement, his company's strategy made another massive Bitcoin purchase, adding over 6,500 BTC worth roughly $555 million to its already massive stash. Now holding over 538,000 BTC, Strategy continues to double down on its belief in Bitcoin as the future of money. With Atkins' crypto-friendly stance and Saylor's relentless accumulation, the message is loud and clear. The tides may be turning in Bitcoin's favor, both on Wall Street and in Washington.
Yeah, so BMAX is an ETF that launched about a week ago. And there's a whole one of the great use cases of Bitcoin is to put it in the middle of a capital structure of a publicly traded company. And if you have a publicly traded company, it causes your equity to be very volatile. So like my company's the most volatile equity out of the S&P 500 universe. Sometimes a volatility of 90 to 100. Well, when the volatility of a public company gets above 45, you can sell convertible bonds because convertible arbitrageurs actually are able to sell that volatility or extract it, and that pays the cost of the interest.
Bitcoin just made history again, officially entering the top 5 most valuable assets in the world. With its market cap hitting $1.87 trillion, it has leapfrogged over Google's parent company, Alphabet, as well as Silver and Amazon. As of April 23, Bitcoin now sits just behind gold, Apple, Microsoft, and Nvidia, an elite club once thought untouchable for a decentralized digital currency. What's even more impressive is that Bitcoin's recent rise comes during a month where tech stocks have struggled. While the Nasdaq 100 dropped 4.5% in April, Bitcoin surged 15%, breaking away from its long-standing correlation with traditional tech assets. This decoupling shows that investors are seeing Bitcoin not just as a tech play, but as something much bigger, a strategic hedge in today's uncertain macro landscape. Much of the renewed energy around Bitcoin is tied to political and economic shifts. Trump's call for a strategic Bitcoin reserve, criticism of Fed leadership, and global concerns around the U.S. economy have all pushed BTC back into the spotlight. Meanwhile, Alphabet faces mounting regulatory pressure and competition, which is dampening investor enthusiasm. For Bitcoin, this moment could be the beginning of its next major chapter, less a bubble, and more a seat at the global financial table. And do not forget to subscribe to Bitcoin Saylor. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.